How's it going, everybody? This is Jeff Grana with GPS Realty at KW Metro Center, and I'm here with another market update for you. This is the newest data that we have from last month, which is March of 2022, and I aggregate it for you from a handful of different trusted sources. First, as you know, in most markets, price is driven by supply and demand. It's no different in the real estate market. So in the business, we like to say that all real estate is local, which is important because even though you'll hear lots of stats on the news on a national level, that's not really helpful to you because what matters is what's happening in your market, in your county, in your neighborhood. This is why it pays to know a local real estate expert who tracks this stuff. Demand in every county in Northern Virginia has risen month over month, and the lack of supply is keeping upward pressure on prices. We'll talk more about that in a minute. Let's take Fairfax County inventory, for example. In real numbers, we listed almost 2,000 new homes, which is over 9% less than last year, and closed on over 1,400 homes, which is about 6% less than last year. From February 2022 to March, technically, inventory rose 40%. The thing is, the numbers are so small that the percentages seem big. An extra 230 active listings took our inventory level from 10 days in February to 14 days in March. Don't forget, a normal market is somewhere between 90 and 100 days around here. We're at 14. Nationally, new listings have increased for the third month in a row. But again, is that reflective of the Northern Virginia market? Nope. That's why it's important to take a look at local information from a trusted source. In fact, this has been a chronic problem in our market. We've been dealing with this problem for all of the last 5 years with the exception of the summer of 2021. With the exception of February, where we almost broke even, we've been seeing fewer new listings each month compared to the year before since July of 2021. March of 2022 marked the first increase in active listings in 6 months. On the whole, this makes some intuitive sense. Our area has seen between 17 and 20% appreciation, which is just not sustainable and is really not common. So it seems like prices are starting to rise to the level where that equilibrium is happening and buyer demand is starting to fall off. Now, don't get me wrong. We're seeing a solid spring market, and I expect to see that continue through the summer. But out into the next 12 months or so, I expect to see some changes. Now, let's talk about interest rate hikes for a second. The big buzz in our industry and across the country is that the Fed has been raising interest rates incrementally to try to arrest the 8.5% inflation that we're seeing. The thing is that rate hikes are basically just going to push people off the fence. People who thought maybe now's the time to buy a house and they sort of started dipping their toe in the water, those people are scrambling the jets and trying to get it done. People who aren't ready to try to buy something new or aren't interested in selling anyway are going to sit this out. All the experts that I'm following are telling us that the rise in interest rates will moderate the market instead of squash the demand or destroy it. Let's be honest, we all know the market could use some moderation anyway. Am I right? You might have seen that buyer sentiment is at a new low with just 28% of people on a poll that Inman did. Inman is a trusted source. Just 28% of buyers believe that it's a good time to buy a house right now. Well, yeah, they're not wrong. It's tough to afford one, and it's even harder to get one, which is why I'm telling you that if you're thinking of selling your house right now, market conditions like these are not going to be around much longer. The Fed is going to increase interest rates, and new construction is going to start to come on the market, which means inventory is going to rise, which means buyer demand is going to fall. I don't think it'll fall negative. I just don't think it's going to be anywhere near as strong as it is right now. The definitive thing to say is, I think we're at the top of this market. That's all I've got for you today. Thanks for watching as always, and be sure to tune in next month for some more honest guidance.